Hi, my name is Joe Luciano. I'm a full-time realtor with Bentley's Real Estate out of Newburyport, Massachusetts. This video is going to be a full overview and a complete guide throughout the home buying process. I'm going to leave timestamps in the description below so you can jump around. Buying a home can be super stressful and a daunting task looking at it from the outside, but I'm hoping that throughout this video what we'll accomplish is that it's really not that bad of a process once you break it down into smaller parts. Starting this video off with before you even start searching for homes. Before you start going to open houses, scheduling showings, there's 3 things you should do first. Number 1, assemble your team. Number 2, know your budget. Number 3, understand why you're moving so you can clearly differentiate between your wants and needs when searching. So the very first thing you're going to want to do is assemble your team. This includes your realtor, your lender, and possibly your attorney. If you have either a trusted lender or a trusted realtor, you can certainly ask them for recommendations on a good pick for the other one, as they've most certainly worked with a number of professionals and they know who they like, they know who's good, and they know who will get the job done. There's a number of different ways you can find your realtor. You could ask a friend or family member, maybe a neighbor, someone who just recently closed on their home, and ask if they had a good experience with their realtor. You can also look up who has had a lot of sales or who has a lot of experience in the particular neighborhood or area that you're interested in moving to. I think Realtor.com has a pretty great program for this. Or you may want to find someone who's putting out helpful information on social media. When it comes to finding a realtor, there is one thing I would put a little bit of caution towards, and that is finding someone through the big websites like Zillow, Realtor, or Redfin, through their scheduled tour or reach out to a buyer's agent feature. When you request a tour or ask for more information on one of these platforms, you're just being connected to a realtor who's paying for you and your information as a lead. And this could be anyone. There's no vetting or qualification process to whoever gets to pay for these leads. And you might get someone that's really good and really experienced, but you might also not. It's a bit of an unknown and a gamble on who they'll hand you to, so just do a little bit of vetting beforehand. I'd encourage you to interview 3 different realtors. Find someone that's familiar with the area that you're interested in, find someone that has a decent level of experience, and then you're gonna really wanna find someone, and I think this is honestly the most important part, that you're gonna enjoy working with. Buying a home is a stressful process. It's not exactly a fun process. So if you can work with someone that's gonna at least make it a little bit more enjoyable, that's absolutely worth doing. It's a stressful process. It can be an emotional process. You might as well do it with someone that you like. When it comes to your realtor's compensation as a buyer's agent, you don't have to pay your realtor anything directly. Your realtor will be paid by the seller, as the seller will be paying all of the commissions as whatever's agreed upon in their listing agreement with their side. Okay, so we won't really need an attorney in the process at this stage just yet, but if you want to go ahead and find someone and get that all sorted out now, great. The best thing that I've found is when your realtor, your lender, and your attorney are all on the same page and working together, effectively communicating. I like to call this the dream team. When everyone is on the same page, it makes the communication super seamless, and it will make the process much more enjoyable and seamless for you as well. Once you know who you're going to be working with, the next step in the process is get your pre-approval and figure out your financing. Now, if you're planning to pay cash, you can skip this step entirely, as there's no need for a mortgage. Whichever lender you decide to work with will most likely have an online application portal, which they'll request a series of different documents. Generally, they're going to want the past few years of your tax statements. They're also going to want any income documents. They're going to want bank statements, pay stubs, basically anything regarding your pay, income, balances, they're going to want it. In getting a pre-approval, the lender or loan officer will pull your credit. A lot of people worry about your credit being pulled, but this is really no big deal. Your credit score will hardly be impacted. Even if you were to shop around between different loan officers, different lenders, and you want to shop and compare rates, as long as you do it within the same time frame, you should be good as well. It'll only count as one pull. And I will also add, I know some lenders have like a soft pull method, or they have a way that basically checks your credit score without even marking as a pull, so that could be another way to get a pre-approval without that initial resistance. So with all of this information, the lender will be able to analyze your income, figure out how much you make, how much you have, and they will be able to give you a pre-approval letter. Now, maybe you're not just ready quite yet to purchase a home, but you want to get a better deal or a better rate. A benefit to talking to a loan officer or a lender early in the process is that they can actually help guide you along the path to get you into a better loan or a better program, They can kind of tell you, okay, let's pay down this loan, let's work down this balance, let's pay off this credit card, let's build up your credit score a little bit by doing different tactics. They could even send you towards a credit repair agency to help you get ultimately a better rate and a better deal on your loan. If you're very organized, the pre-approval should be no big deal. Oftentimes, if you're organized, the lender could have this pre-approval letter turned around in a day or two, or maybe a couple of days. The pre-approval should give you an idea on what you'll qualify for in your max purchase price, and then also an idea on your monthly payments. You know, your budget doesn't necessarily have to be the max amount of money that you can qualify for or the max amount of money that you can spend. You certainly don't want to be house poor. While talking to your lender and going through the pre-approval process, your lender will also be able to point you in the right direction towards different loan programs and different promotions that they have going on. This will vary greatly from person to person and will depend on your unique situation. There's of course a typical conventional loan, but it may also make sense to go with an FHA loan. If you served in the military, perhaps you qualify for a VA loan. If you're in a rural area, or if you have the, I think, right income limits or size of family, you could go with a USDA loan. There's basically there's like an infinite number of options you can go with, plus a ton of other different avenues and potential programs to go with you and your specific situation. With your pre-approval, your lender will also be able to calculate your closing cost and how much money you'll have to bring to closing or due at closing. Okay, so we have our team in place, you have your pre-approval, we're almost ready to start looking at homes. But before you start going out and looking at homes, I think it's really important to take a step back and think about why it is that you're moving. Do you need more space? Do you want to be in a better neighborhood? Are you looking at this as a financial decision, maybe as more of an investment? These are all important things to consider when getting ready to move, so you can make a clear decision and think with clarity in what's oftentimes an emotional and stressful process. The best thing you can do with decision making is have a clear head. And whatever the reasons are to why you're moving, it's really important to be able to separate your wants and your needs, all while being within your budget. You may want a 2-car garage, but you need that 4th bedroom. So when looking at homes, you may think emotionally, but just remember, stay on track and go for what you need over what you want. Also keep in mind, while looking at homes, certain things can be changed while others are more difficult to be changed or just simply can't be changed. These are all questions and conversations you should have if you're either buying alone or buying with a partner or a spouse. Make sure you guys are on the same page ahead of time before you go out and start looking. Please, please, please do not let shopping for a home ruin your marriage. All right, now that we have our team in place and up-to-date pre-approval and we know what it is exactly that we're looking for, we can do the fun part of looking for a new home. What you'll want to do is create your search criteria with your wants and needs in mind, and then either have your realtor send you listings automatically through MLS, or you may just want to set up listing alerts on your favorite platform, whichever is easier for you to use. MLS is great in that it's the most up-to-date and it has the most information, but as a realtor, I can tell you firsthand the software is remarkably clunky. It's definitely not as fun to use as something like Zillow. You're gonna wanna set up your search so you're alerted whenever anything new comes onto the market, especially in a hot market like we're in right now where it's more of a seller's market. You're gonna wanna be the first in the know or one of the first people to know about new homes, as you may not have that long to take a look at them. Timing is everything. In the process of looking for homes, your realtor should also be actively looking and proactively searching within their network for any listings that might be coming soon to the market or any off-market opportunities that might match your criteria. Once you see a home that you like or you want to take a further look at, let your realtor know. They'll schedule a showing for you or meet you at an open house, and they'll go through the home with you, especially if this is your first time going through a new home. You're definitely going to want your realtor there with you so they can point out exactly what you should be looking for. Once you're at the home, here's a few things you should pay attention to. The location. How's the neighborhood? Do a couple laps around the block and really get a feel for the area and the neighborhood that the home's in. Could you see yourself living here? The lot. How's the yard? Are there any easements, wetlands? Is there anything you should be concerned about with the land or with the yard in general? You should also try to ask about lot lines, especially in a tighter neighborhood. Make sure the neighbor doesn't have anything that's encroaching onto your lot lines. Depending on where you are there any trees overhanging the home that you would need to be taken care of? Just, anything that could be a problem on the lot. If you're looking at a condo versus a single family home, how is the building? The common areas, the exterior of the building, how well kept is the building? Just make sure that everything is well taken care of, because certain parts aren't really within your control, especially especially in a condo, your realtor should be able to check and see if there's any special assessments. But if there's no special assessments, as in the HOA is going to be set and you don't have to worry about any additional payments there, you should be looking at things on the building to see if there's any early signs of neglect or poor maintenance. Because if the building is poorly kept, then you risk having a higher HOA over time with special assessments. Say they need to do a lot of work on the building, then your homeowners association fee will go up. Still outside, be sure to inspect the exterior of the home. I know it can be tempting to jump right inside and go look at the inside of the home, but definitely take a minute to walk around and go through the entire exterior of the home. Look out for things like rotting windowsills, peeling paint, or any cracks in the foundation, anything major that could be of concern. If you can take a few steps back to see the roof, try to look and see if there are any curls in the shingles or if there's any growth on the roof, anything that could cause a problem down the line, as a roof is one of the more expensive things to replace, one of the more expensive things to take care of. So definitely try to get a good look at that and get a good feel for how the condition of the roof is. Not to mention, if the roof is leaking, it's kind of hard to hide that on the inside. Ultimately, if you do get a home inspection, they'll go through any noticeable flaws with you, but it doesn't hurt looking at this stuff ahead of time to potentially save yourself the trouble. Moving to the inside of the home or the unit, try not to pay attention to things like the color of the walls or the seller's decoration, the seller's furniture. The decor and furniture most likely won't be included in the sale, and the paint color will be fairly easy to change. You know, what I'm really trying to get at is don't get hung up on anything that's only going to cost a couple of $100s or a few $100s on a purchase that's hundreds of thousands, if not over $1 million. Pay attention to things like the layout of the home. Is it usable for you and your family? Is the size of the rooms, of the kitchen, bedrooms, bathrooms, is that all usable for you and your family? Because while that might be changeable, it's much more expensive and it's much more difficult. When it comes to the systems of the home, be sure to take a good look at all of these systems. Even if you don't really know what you're looking at, you should be able to tell roughly if it's in decent condition, if it's been taken care of or not. They are essentially the heart of the home. This is where it would help to ask the age of the systems and then also ask if there's any service history. Your realtor could probably do this ahead of time. The final thing I'll note for viewing property and checking out homes is look out for anything that screams DIY. Is there anything sketchy or jerry-rigged on the house that you just, kind of gives you a little bit of a red flag? It could be nothing major. It could be just a small little thing that the homeowner tried to take into their own hands. But the major concern I have with things that are DIY or jerry-rigged are anything that's maybe hidden, under the walls that we don't know about, that an inspection really won't show. And I get it. Some homeowners are craftsmen. Some homeowners are great at doing their own work, but, some people aren't. Some people think they can do more than they actually can, let's be honest. So that's one thing to watch out for. In my state of Massachusetts, it's caveat emptor, or emptor, in which it's the buyer's sole responsibility for the condition of the property. They're basically assuming the due diligence and basically inspect the property. This doesn't mean the seller could lie about anything, but it means that it's basically the buyer's job to uncover certain flaws within the property. Once you've been to a few different showings or a few open houses, you'll probably eventually go to a few without your agent. Just be sure to let them know ahead of time what you're planning on looking at. They can probably try to get any additional information or any documents to you before you go, so you can go in with a clear head and any idea on any problems that might be there ahead of time. Also, if you're planning on going something that you're really interested in and you think you might be interested in putting an offer in, it wouldn't be a bad idea to let your lender know ahead of the weekend so that they could either get you an updated pre-approval or make sure that you can actually afford the home, especially in a case where you might have higher taxes than what you're used to or a higher HOA. You'll want an updated pre-approval letter when you go to submit an offer, and it could also help in preventing you from looking at anything that's outside of your price range, especially in cases where there would be a higher HOA or a higher tax rate. And this is much more prevalent for people who are shopping for homes at the higher point of their budget or right at their pre-approval limit. So let your realtor know, let your lender know. Okay, so you found the perfect house. Now what? Now it's time to talk to your realtor, talk to your lender, and then submit an offer. Sounds scary, but I promise you it's not. Within this offer, we're gonna lay out everything from the purchase price, the terms, to the closing date. The seller will have 3 possible responses to your offer. They could either accept it, they could reject it, or they could counter it, which is basically just throwing the ball back into your court. Going through the offer, again, I'm in Massachusetts, so things may be different in your state from my state, so be sure to talk to a local professional. But the offer will include the purchase price, the first and second earnest money deposit amounts, the purchase and sale signing date, the period for due diligence, whether or not you have a home inspection, and any of your other contingencies. This is where you would have things like your financing, your loan. Within the loan, you would also include your commitment date, when you need a commitment letter from your lender, and then you'd also include your closing date or any additional terms. You're going to work closely with your realtor in putting together an offer that protects you, protects your money, but it's also going to be strong enough for the seller to agree with it. You want to write an offer that doesn't really open you up to any liability or have you spending more than you want to or doing anything you're uncomfortable with, but you do want something that is strong enough for the seller to accept. And if you're in a multiple offer situation, that's where it starts to get a little bit more tricky, so definitely be sure to talk to your realtor in those situations. In a competitive situation, you're going to want to add terms that are especially attractive to the seller. This will vary from seller to seller depending on their specific situation and their motives for selling. Sometimes price is absolutely the most important thing for sellers. Other times it may be things like a quick closing, or they may want an extended period of time to find their next home. So it's really important to have your realtor reach out to the sell side to get an idea of what the seller is looking for so that you can create something that's mutually agreeable between both parties. When your realtor submits the offer, or when they officially submit the offer, what they're going to do is they're going to submit it in a package. This package will include the contract to purchase or the offer itself, so the offer letter, and then it will also include your pre-approval or proof of funds. Yes, the seller will actually want to know that you're capable of getting a loan or that you can afford the house. That's where our dandy little pre-approval comes into place. And then they'll also include any other documents that they want signed, basically just stating that the buyer is aware of everything that we've listed. So that might include an include/exclude, saying like, okay, the washer and dryer is included, such and such is not. And any additional documents included with the listing signed that may be needed. If your offer tickles the seller's fancy just enough, congratulations, you will have yourself an accepted offer. We're not quite yet ready to celebrate just yet, as we still do have a number of hurdles to jump through. The very first step after getting your offer accepted will be delivering that first earnest money check. The first deposit is usually $1,000, and this is what binds your offer. Basically a, hey, this is legit, let's do this thing. We actually have a little bit of skin in the game now. Your earnest money is different from your down payment. Your down payment is used for your loan and purchasing the home, where your earnest money is more of a goodwill type deposit, showing that you have sincerity about purchasing the property. This deposit would be at risk if you were to walk away from the property once it's already under contract, under agreement, for a reason not specified in the contract. There's two earnest money deposits. The first earnest money deposit would be right after having an accepted offer. This one is usually the smaller of the two. And then the second one would be upon signing the purchase and sale agreement. The amounts that people use for an earnest money deposit will really vary from person to person, and then also their financial position. But a typical figure that we'll see is a 5% of the purchase price between both deposits. There's no one answer here for deposit. I've seen anything go for different earnest money deposits. The one thing I will note is the higher your earnest money deposit, the stronger the offer. The seller basically wants to know that you have a little bit of skin in the game, you have a little bit of risk from walking away from the deal. So just an example of an earnest money deposit, let's say the purchase price of a home is $500,000. 5% of that would be $25,000. Your first deposit would be $1,000 after having accepted offer, and then upon signing the purchase and sale, the second deposit would be $24,000. So the two checks together are $25,000. Let's say you're about to close in just a few days, everything is good to go, but you get cold feet and decide you want to back out. If you back out for a reason not specified in the contract, that earnest money deposit would be tendered to the seller. Just because you may not want to move forward with the transaction, it's important to note that oftentimes there's a lot of depth with these transactions. It can usually be a domino effect between other transactions. Let's say, for instance, you want to back out of this contract. That seller has another home under contract that they're planning to use the funds from this home to purchase, and you back out. Now they have to back out of that home. This can spiral and go on and on and on. You could basically ruin 3 or 4 deals with one person backing out. Hence, that's why your earnest money deposit would go to the seller. This would be considered as damages. Now, on a more positive note, let's assume that everything goes to plan and you end up closing on the home What happens with that earnest money deposit? The earnest money is held in escrow throughout the whole time. It's held by the listing side. When you go to close on the home, that earnest money deposit will be put towards your down payment. So it's not like that money's disappearing. It's going towards your down payment. Say you're putting 20% down, you have 5% in earnest money. At closing, you'll only need to bring 15% plus whatever your closing costs are. All right, so along with submitting your first earnest money deposit, right after getting an accepted offer, you're gonna wanna schedule your home inspection. Your realtor should be able to provide you with a few different home inspectors who are good and that they trust. With a home inspection, it's really important to remember that it's basically their job to point out any flaws, regardless of how big or small. So they're not going to be pointing out everything that's perfect, everything that's great. They're going to be looking for flaws. Sometimes they can be a little bit of alarmist, so just keep that in mind and go in with a level head. This inspection period that you negotiated in your initial contract is not only where you'll get your home inspection, but if you want to get any other type of contractors in, now is a good time to do so. So you could get your electrician, plumber, or contractor in just to look at anything and get a quote on any ideas. Once the home inspection is complete, the inspector will send you a report with all of their findings and notes from the home inspection. You'll have 3 options to go from here. The first being you could continue with the purchase as is, everything went smoothly, you're satisfied, and you continue with the purchase. The second option would be that you could request the seller to take care of certain issues, or you could request that they offer a credit for covering one of the issues. Maybe they take care of the issue themselves. And then finally, depending on how you've written it into your contract, you also could back away from the property entirely. You can renegotiate with the seller for them to either take care of some of the issues or offer a credit, maybe even reduce their price. Or you could walk away from the purchase entirely, get your earnest money back as you covered yourself with a home inspection contingency. A home inspector can tell you what's off or what looks like it may need updating or what may be needing updating within a few years. It might be towards the end of its life. But one thing a home inspector can't do is they can't tell you how much something's going to cost. It's outside of their wheelhouse for them to give you a quote and an estimate on how much something might cost. So if there is something that came up in the home inspection that you are concerned about, I would encourage you get someone out to provide a quote separate before your inspection period is up. Your home inspection will be an out-of-pocket expense. You will be required to pay the home inspection right after getting it. You'll be on the hook for roughly $500 fairly early on. The cost will of course vary from inspector to inspector and property to property, but $500 is a good rough estimate. Okay, so hopefully you've survived the process so far. The timeline so far since getting our offer accepted has been we delivered the first earnest money deposit. That was on like day 1 after getting an accepted offer. We scheduled a home inspection. We had a home inspection. This has all been basically within a week. Meanwhile, all of this is happening. The attorneys have been hard at work behind the scenes working on the first draft of the purchase and sale agreement. That first day after getting your offer accepted, that's when your attorney will officially come into the loop. The seller's attorney will draft the first version of the purchase and sale, and then once they have that first draft, they're going to send it over to you for review, and this is where you'll want to have your attorney look at it and make any necessary revisions or changes of wording that you'll want to add in. You'll really want to make sure that your wording is tight and that you're protected, so it's definitely worthwhile having an attorney, and it's really not that much more expensive. So it's definitely beneficial to have an attorney on your side. The purchase and sale agreement will have all of the terms that were outlined in your contract to purchase or your offer. There will also be further wording of what will be included in the sale. This will also have any specific wording on what will be included in the sale. For example, the washer and dryer. This is where you get that further level of negotiation where your attorneys will be going back and forth until you have a finalized purchase and sale. The agreement will also note how the home will be delivered at closing. Once the purchase and sale agreement is signed by both parties, you're officially under agreement. This is where you would go ahead and deliver that second earnest money deposit. It's almost time to celebrate, but not quite. We still have one major hurdle in the form of financing. So once you're under agreement, you're going to be working really closely with your lender to make sure everything is all set and good to go. You're going to go through the underwriting process. What we're ultimately hoping to get to is a commitment letter by our commitment date, which was outlined in our contract. This commitment letter will basically just say that you've been through underwriting and that we're still looking good. After we have the commitment letter, we're looking for a clear to close. That'll typically come in a few days before closing. Depending on the structure and layout, you might get it much earlier. This is what we're really looking for. clear to close is kind of the official go-ahead. This is the green light. Once your offer is accepted, the bank is going to go ahead and order an appraisal. The appraisal will have someone who's independent of the lender, independent of the seller, go out, look at the home, and create an appraisal on it. The bank ultimately wants to know that the home is worth what you're paying for it. They're not going to want to lend you hundreds of thousands of dollars if they think you overpaid for the home, so that's why they get it appraised. In the past few years where the real estate market has been really crazy and many homes were going well over asking price, it was really common to see appraisals come in well below the agreed upon sale price. In the event that a home appraises below the agreed upon sale price, the bank will just simply not lend you that amount of money for that purchase price. They're going to want you to either bring the cash to cover the difference, or you could consider having the seller come down in price, or maybe somewhere in the middle where you bring a certain amount of cash and the seller comes down a little bit. So let's do an example here. You agree to purchase a home at $500,000. The appraisal comes in at $490,000. You, the buyer, will either need to bring the $10,000 difference in cash, or the seller will need to drop their price down to $490,000. You might be able to reposition funds in your down payment to then take out as cash and then pay towards the difference, increasing your loan to value ratio, but this will of course depend on your specific situation, loan program, and everything else. Now let's imagine that that same home that we agreed to purchase for $500,000 had an appraisal come in at $505,000. You do not have to come and bring more money. That just means that you did well on your purchase by about $5,000. Moving on from the appraisal, the lender will be constantly in contact with you throughout this process as they work on underwriting the loan. They're going to be doing all of the numbers, all of the back end, making sure your debt to income is good, making sure your income's what you said it was, checking your credit. They're going to be doing all of this to make sure that you can actually pay for the loan that they're prepared to give you. This is a really important stage to not do anything that could impact your financing. This includes opening new lines of credit, making any big purchases, or really doing anything major from when you were pre-approved. If you were to lose your job, that could also impact your ability to get financing for obvious reasons. Let's jump ahead and assume that everything goes to plan and everything works out. Your lender will reach out with a commitment letter, basically saying that you've undergone underwriting and you're almost good to go. Once all of the loose ends are tied, your lender will notify you that you are clear to close. This is the first time in the process that I would say it's okay to celebrate just a little. You'll receive a closing disclosure from your lender with all of your terms of the loan. This will have your monthly payment, your interest rate, your down payment. It should also give you an idea on how much you'll have due at closing. This includes all of your closing costs. Make sure everything in there checks out, everything is good. Make sure your interest rate, monthly payment, everything is what you thought it would be. It shouldn't be too different from what they originally told you, so just make sure that everything checks out. The lender will then schedule a time and place for the closing. The date was already set ahead of time, but now that everything is good to go, we're clear to close, the loan is ready to go through. Now we can actually close on this home. So we are so close in the process. We have one step left, and that is the final walkthrough. The final walkthrough is usually either the day before closing or the day of closing, just ahead of closing. This is usually a pretty exciting time for home buyers, as this is basically the last time you go through this home before it's yours. During the walkthrough, what you're doing is you're making sure that the home is being delivered in the condition that it was agreed to be delivered in the purchase and sale agreement. Make sure the seller hasn't left anything behind, make sure there's no garbage or anything like that in the home, and then usually it'll be agreed upon that it'll be left broom clean. Basically, you just want to make sure that the home is exactly as you expect it to be, free of any of the seller's belongings. This should hopefully go very smoothly. You may just have to ask for the seller to come back and take a few more things. Usually, worst case, you just have to throw a few things away yourself. But usually you just ask the seller, they'll come back, take care of it, and then when you close, you can move into a clean home. Alrighty, after the final walkthrough, it is the grand finale. That is closing time. The closing attorney or the agent that will be there will let you know everything that you need to bring ahead of time to the closing. This is typically photo ID, method for funds. Usually this is a cashier's check or a certified check. You should have received all of your documents ahead of time to review, as there simply wouldn't be enough time to go through and read each and every document at the closing. The closing attorney that's there with you will go through the documents, basically just give you a quick explanation of each one. If you have any questions, they'll be happy to answer them there. Get your wrist ready because there's going to be a lot of documents to sign here. You'll either need to bring a cashier's check or a certified check, or maybe you'll have instructions for a wire transfer to the escrow agent. This is for your total due at closing. This would be your down payment, any closing costs, anything that's not already in escrow. I'll say it again, but be prepared to sign a lot of paperwork. But at the end of it, you'll have the keys to your new home. Now you can sit back, relax, and get ready for the stress-free and super enjoyable process of moving. All jokes, that's all I've got for you. Thank you so much if you made it this far into the video. I am certain that I did not get to go into every single little detail about the home buying process, but I think this should give you a really decent outline. If you have any specific questions, feel free to reach out in the comments below or send me an email. I'm only licensed in Massachusetts, but I can happily connect you with someone in your state. While it all might seem overwhelming, just remember to break it down into small pieces and that it's really not that bad when you do that. If you got any value at all out of this video, a like would be greatly appreciated. If you or someone you know is buying or selling a home in Massachusetts, I would love to get in touch and see if working together would make sense. Until then, thanks so much for watching.